Hi there, welcome to this morning's edition of the MPC Markets Morning Call, 24th of November 2025. I'm Mark Gardner. Stocks bounced on Friday as New York, Fed John Williams, Fed official, signalled that there was room to lower the federal funds rate in the near term, describing policy as only modestly restrictive and noting inflation risks have eased while employment risks have grown. Now, that's dovish, basically, and this to explain the picture here. And then being hawkish is when you want rate hikes. The rest of the Fed has been very hawkish, and we had rate cut expectations go down to about 20% at the end of last week. After Fed Williams' comments, those expectations jumped back up to 70, which is I think is probably a little bit of hopium rather than actual. When you've got the broader Fed saying that. They need more numbers. They don't tend to make speculative statements like this. He is generally a fairly dovish and sits on the dovish side. He's very happy with loose monetary policy in the past. So I'm not entirely sure why the market reacted so well to it, truth be told, because it really, it wasn't really much of a statement that was out of character, nor was it, was it in line with anything else that about six to eight Fed members have said in the last week or so. So obviously we had a bit of a horrible run for the Asian stock markets on Friday, just on the back of that that fall in the US. So the ASX 200 was down 1.5, Nikkei down 2.5, as was the Hang Seng. China down 2. Eurostock's down probably about 1, but that would have seen some of this recovery here in the US market, which was up 1% broadly. Dow was up a little bit more than 1%, S&P bang on 1%, Nasdaq 0.77. The Russell, though, rallied about 3%, very interest rate sensitive, the Russell 2000, small cap index, and justifiably should jump higher on the back of that shift in rate expectations. We've still got negative momentum here in the technicals. We were on the weekly, I think a sell or a strong sell just about. But so we haven't really turned around much in the near term in terms of the dailies, and we still only have the basically the 100 and 200 day moving averages in the US indices that are maintaining any sort of positive technical momentum here for the for the market. Now, Nvidia still couldn't have any luck. The chip stocks were broadly down. Oracle got hit yet again. That stock's now dropped 44% from its highs. Looking fairly grim as everyone's starting to worry about their debt to equity ratio. It seems to me like they're starting to get a little bit carried away. But if Oracle was to fall any more, there would be some form of contagion to the rest of these stocks in the broader data center, AI, and Mag 10. Stocks overall. So Google's still powering along, has been really strong, 52-week highs. There was talk of them bringing out a chip that basically does a lot of what the Nvidia chips do on Friday as well. Going to do a little bit more of a deep dive into that, but our chip and tech man Kai Chen, I was going to have a discussion with him about that before before I worried about getting into too much detail. But yeah, then broadly the rest of the market very green. As I say, basically on the fact that now those rate cut expectations have shifted from essentially no chance to there being quite a chance. Personally, I don't think they're a chance. I think there's not enough data at this point in time. We're really only going to get September data, and for the time being, and then we're going to play some catch up probably in early December on the October-November data. So it'll be interesting to see. All the figures are pretty tentative at the moment. So we might tentatively we're going to get core PCE and PPI. There is a G20 meeting this week. CPI is out here in Australia on Wednesday. That'll be fairly key, but I think they've largely written off any sort of rate cuts here until at least next year, if at all. And as you can see, there's not much in the way of, there's not really much in the way of serious earnings. Alibaba might be interesting to have a look at from a personal perspective. I'll be watching Workday. I'll be watching Autodesk because they're both sort of at that pointy end of, the monetization of AI, in my opinion. And there's, and apart from that, really, I think it'll be a relatively quiet week and a fairly key week as to whether this is the dip or whether this market sell-off gets deeper. Basically, in terms of the commodities, largely unchanged. Silver was off about 1%. Copper was up 1.2. That's really the rate cut thing. As platinum, crude was down 1.5. Largely flat across the board, except lithium was down 1.5%. Uranium down 1.2. Bitcoin stabilised. Probably looking at Bitcoin being, you're starting to dollar cost average down here, or you're starting to have a bit of a nibble and have a bit of a buy, according to Finn Judell, our resident crypto expert. And look, I think gold and silver have done pretty well to survive the US dollar being up nearly 1% on the week overall. There were some new announcements for Trump's cabinet over the weekend. We had Laurie Chavez de Rima is now the Labor Secretary. There was a bit of a reshuffle there. She's very pro-business, so it'll be interesting to see what comes out there. Dr. Marty McCary is going to be the Commissioner of the FDA. Likely emphasis on medical transparency, drug approval, streamlining and cost-cutting within the FDA. It'd be interesting to see whether that's going to, after the dramatic fall of healthcare just generally over the course of the last year and uncertainty around policy, whether this appointment is going to be positive or negative. And then Scott Turner, the HUD Secretary, so that, housing and urban development. Trump also met with the New York mayor, which they couldn't be at more opposite ends of the spectrum. It's actually quite a civilised meeting. It didn't go too badly. So, which I was very surprised about. But overall, don't see it too much this week. As I say, I think it's a really key week from a technical standpoint. If we, to see whether this is what we've seen so far is the dip, or whether things deteriorate further over the course of the week, is yet to be seen. I think we need some more economic data. I think the market was very, very optimistic to be pricing in rate cuts, given what the large majority of the Fed said. So I think the SPI was up about 1% or more. So we would expect the market to open pretty strongly here in Australia, and then and probably head a little bit lower over the course of the day. But only really a short one, just on the basis that there's not a huge amount going on. We had a lot more last week. So look, have a great day. Have a listen to the Global Alpha podcast that's available on YouTube and on Mosaic and Spotify, etc. The boys will have a talk a bit more US specific focus and global specific focus today. But have a great day, and we'll speak again tomorrow. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.